PayPal stock. It's about to be big time for PayPal. PayPal earnings will be out in less than 24 hours from now. We're going to speak about my expectations, what I think is going to happen with the stock price, all those sorts of things. We'll talk a little bit about valuation in this video in regards to PayPal. What's my plans to do with PayPal stock if the stock goes down on earnings? What are my plans if the stock goes up a bunch on earnings? If it's flat on earnings, we'll speak about all that in this video here today. Then I want to react to a bunch of little clips here. We're going to react to this one. Stephanie Link trims Apple. Then we're going to react to this one. Dan Ives, who's always in quite an outfit. We'll speak about his video here. Recent tech sell-off is a bump in the road, not the end. Joe Terranova talking about how to play CrowdStrike. CrowdStrike has been a tremendous stock in the market, but recently, obviously, given what happened, right? Their stock has been nothing but down. So we'll react to that one. Also, Kramer's going to talk about CrowdStrike. Want to react to that one there. And then last up here, I think this is actually an important video for everybody to watch here and react to. Kamala Harris tax proposals focus on social issues, right? Now, I know, certainly if you are, somebody that wants Trump or you think Trump's going to win, a lot of people are dismissing Kamala as being a threat to win the office. And I would say take it pretty serious. I would say, when it was Biden, I was like, Trump's got the election easy. I can tell you there's been a massive change in regards to the amount of excitement from the other side, the push, all those sorts of things. So I would say this is going to be a very, very serious election now at this point in time. And so what is Kamala's proposals in regards to tax? So we'll watch this. We'll react to that one. I want to share my opinions in regards to that. Appreciate y'all joining me as always. Thanks so much for being here. We should be at 48,000 plus subscribers here. I think right now or today or tomorrow or something like that. So appreciate y'all being here. Pin comment down there today will be if you're looking for access to 1000xstocks.com as well as access to my private group. That will be the pin comment down there. You can fill out an application, okay? Alrighty, so PayPal right out the bat here. So we're going into earnings, $50-something, high 50s, right? The expectations for the company as far as EPS goes, this should be on a GAAP basis. They're expecting the EPS to be down about 15% in this particular quarter. I think a lot of that is because of the employee layoffs and some of those one-time costs in regards to that. And then and also additionally, I believe last year they had a sell-off of some business in regards to buy now, pay later that helped EPS bump it up a little bit. As far as revenue goes, 7% expected for this quarter, another 7% for next quarter. And then for the December quarter, analysts are at a little under 7%, right? But these are two numbers you got to focus on here. So as far as, do I think the company's going to beat these earnings estimates or do I think they're going to miss? My expectation is I think they're going to beat on earnings per share specifically. I think as far as revenue goes, they're going to probably come roughly in line or maybe the slightest beat, but I'm expecting kind of roughly in line. I'm kind of in that 7-8% revenue growth. Anything above 8% I'd be really happy with, but I'm not expecting that. I'm thinking 7 to 8%, so roughly in line. Earnings per share is, I think, where they're going to have room to beat on the upside, and next quarter as well. I believe they're going to have room to beat on the upside as well as far as the guidance goes. Okay. Now, in regards to how the company has done the last, let's call it few quarters here. So if we look at the earnings summary here, as far as on a GAAP basis, they beat last quarter. On a non-GAAP basis, they missed. As far as revenue goes in the last quarter, they actually beat for the last quarter as far as revenue goes here. So if we go ahead and pull this up here, if we look on the revenue line item, they beat 5 straight quarters, right? And that's actually the line item I'm a little more concerned with, right? 9% revenue growth they did last year, or excuse me, not last year, last quarter. So if they do something like that, I'll be very, very happy, very, very happy. But I'm not expecting that. Let me be clear, okay? As far as EPS goes, once again, on a GAAP basis, they missed last quarter, but then they beat the previous 2 quarters. I think if there's room for a beat here in any substantial way, I think it's actually on the EPS line item there, especially with the cost-cutting measures this company has going through right now. So in terms of valuation-wise, here's what we're looking at. Forward P about 13 on this buddy. If you compare it versus Visa, if you compare it against Amex, it's significantly lower, right? Visa's at a 25, American Express is at about a 19. And if you look at revenue growth here for the company, they're kind of in that 8 to 9% range, which is slightly under Visa, right? But it actually is outpacing American Express as far as what analysts are expecting over this next year or two. So getting a forward P less than something like an American Express, but the view is PayPal, people view PayPal because it's a little more new age, even though PayPal's been around a long time. people view PayPal as a little more new age than a Visa and American Express. So I think Visa and American Express get this kind of like, they kind of get this higher view of like them being sustainable, because American Express and Visa, these companies have been monsters for decades and decades and decades, right? And PayPal's really only been seen as a monster for really about a decade, right? Before that, PayPal was just kind of seen as some niche service, but they've been a giant for about a decade now between them and Venmo. So I feel like people kind of disrespect PayPal a little bit, and because of the competition, what does the competition do, and those sorts of things, I understand that, right? But if we look at also the margin story, obviously PayPal margins are significantly under Visa and way under American Express as well, right? So for that reason, I understand kind of why a lot of people don't want to own PayPal, given the lack of being a giant for a long time, the worries about disrupting the business model through Apple Pay and others, right? And then, obviously the margins are significantly lower for PayPal. But you could also look at this on the flip side and be like, PayPal's got a lot of room for margin expansion over coming years, right? Now, what do I think is going to happen with the stock price? Man. I mean, the 63 comes in my mind after earnings. The thing that's frustrating with PayPal is, even if the earnings are good, it's hard to see the stock going up big time. We really need to get Wall Street fully to understand Alex Chriss, what he has going for the company, the opportunities here, before we can really get this stock price moving. And so even if they come out with EPS beat, a revenue beat, and a good guidance, right? Does that magically change Wall Street's opinion on PayPal? I don't know. Like, they got to understand the bigger vision and what's going on here, and the data side of their business and how that can expand over the future years for advertising and things like that, right? And so I don't know if magically tomorrow PayPal is going to be understood by the market. And so therefore I kind of walk away with this kind of feeling like I feel good about what the numbers are going to be, but I don't feel great about what the stock price is going to be, because I'm not convinced like Wall Street's going to magically get it tomorrow. Unless a conference call is such a banger where the analyst community and everybody just walks away from that and like, oh, we get it. We got it. Like, this is it. Like, I don't know. And even if they do, man, I don't know. It's just hard for me to see them magically getting it. And so maybe that's just been being in PayPal for a bit here now. I have a lot of shares riding into this in the public account alone. What do I have riding into the public account here? Public account, I posted on X earlier today. Public account, I have 3,105 shares. 3,105 shares riding into this. I have shares in the Patreon portfolio. I have a little options out there that are kind of like leaps in regards to PayPal. So I would say it's like a $200,000 plus position for me. And I don't know, man, just like PayPal stock's a very frustrating stock. And it's not frustrating in terms of numbers, right? You have certain companies that report really disappointing numbers and the fundamentals of the business model are looking bad and you get kind of frustrated with that, right? PayPal's a different story. The numbers have been good. Look at the earnings per share numbers the last several quarters. Look at the revenue numbers the last several quarters, right? Look at the growth, in this upcoming quarter. But with that being said, the stock is a very frustrating stock. It's a very frustrating stock. And so we'll see what happens. That's kind of my 2 cents on this. Now, what am I going to do if the stock goes down a bunch? And when I say down a bunch, we're talking 10% plus move down, right? If PayPal goes down 10 plus percent and the fundamentals of the business model all still look very good, I'll buy a little more of the stock. I don't want to buy a lot of the stock regardless because I already have a lot invested in this company. I really don't want to have more. But if it went down 10 plus percent and the fundamentals look good, the guidance was good, the conference call was good, I would have to buy a little more shares. Now, on the flip side, let's say the stock doesn't really do much of anything. Let's say it has a plus or minus 5% move, which is basically a stock going nowhere. In that situation, I won't do anything. Let's say the stock goes up a bunch meaning a 10% plus move to the upside. What would I do in that scenario? Likely nothing. I would say very high probability I do nothing in that circumstance other than just hold, right? It's just PayPal's at a funny moment for me where I already have my position fully built. I really don't want to buy more shares in the stock. And if the fundamentals look really good and the stock goes up, I'm really not going to want to sell here in the short term either. So then it would just kind of be a hold for me. So it's a frustrating stock. There's no doubt about it. And like I said, it's not about the numbers in terms of frustration. It's really just in regards to the reaction that the stock has, right? It just doesn't react well. And until people really get convinced about a long-term business model, it's going to be just kind of a stock that flounders, right? 60, 70, maybe $80, which I didn't get in PayPal to, for the stock to go to $70, $80. There's too many other stocks with opportunities. I got in PayPal because I want the stock to be $120, $180, $200 plus stock again like it used to be. But in order to get there, we got to get out of 12 forward Ps, 13 forward Ps. We got to people understand this business model and want to pay a 20, 25, 30 PE for this company, right? Like they do other big tech companies that they really respect on a high level. So we'll see. Alrighty, next one up here. Stephanie Link trims Apple.
Position, which
It's
you
still,
just
yeah,
trimmed a little.
I did. I went market weight. I was 300 basis points overweight.
Today?
On Friday.
Okay.
So basically, I mean, the story is still really great, but it's up 31% since April. And that's a really big move. And like every day, analysts are like climbing over themselves to raise targets and be positive. Whereas back in the spring, everybody hated it. And so to me, I think it's going to be really important to learn more about Gen AI, of course. Services, I think, are going to continue to grow 14% plus for the next couple of quarters. Mm-hmm. And China, probably one last bad quarter, down 8%. China decline last quarter, probably the same. That all being said, the stock has had a nice run, and I think it's just prudent. It's now 6.8% of my portfolio. Still really big.
I hear you. I mean, the latest report is that these big AI initiatives are going to arrive a little later than anticipated, which our Steve Kovac, who covers this company, as all of you know, has been following today.
So I think I spoke to you guys about this. It was either on the reaction channel here or the main channel. What she just described there is a very bad strategy in the stock market. It's actually a horrible strategy, but a lot of these Wall Streeters are convinced it's the right strategy. And the strategy is, a stock of mine went up a lot, so now it's a big weight in my portfolio. So now I need to sell that stock because it's a big weight in my portfolio and then rebalance and move that money into other stocks so this stock won't be such a big portion of my portfolio because it went up a lot, okay? Listen, it's a horrible strategy. Horrible strategy. If you want a crap company and the stock goes up a ton and you get a chance to take profits and move that money out, right? But when you own great companies and you sell that stock because of the big weight, it's a horrible financial decision. Here's why. Imagine you own Apple. You're looking into Apple, you love the company. This is 2003, right? You're like fully on with the iPod. You're like, iPod's going to be huge for this company. The iTunes store is going to be huge for this company. Like Steve Jobs has really turned this company around. The balance sheet's improved massively. Income statement's going in the right direction. Like I think they're going to have a great 2004, 2005 and move it into future years. He's got this company all moving in the right direction, right? And you own Apple and the stock goes up a bunch, right? And it becomes a much bigger weight in your portfolio overall. And so next thing you know, Apple's 5-10% of your portfolio size, right? And you're like, oh man, Apple's gone up a lot. Let me sell a bunch of my shares and move that money somewhere else, right? And then the iPhone comes out and the stock goes up a bunch more, right? And you're like, oh man, Apple again, it's like 10% of my portfolio. Because it went up a bunch again, I better sell a bunch more shares and put that somewhere else, right? And then you do it again when the iPad comes out. A horrible financial decision, like absolutely horrible financial decision. If you're going to sell stock just because it went up a lot, it's a horrible financial decision. When you own truly great companies, guess what they're supposed to do? They're supposed to go up a lot. They're supposed to become big weights in your portfolio. Then you can just worry about allocating new money into other stocks. But to sell out of great companies just because they became a big position in your portfolio is not a wise financial decision. It's a poor financial decision. And so that's just a little food for thought in regards to that, right? You want to watch how much you put into a stock. Like usually if I'm putting fresh money into stock, usually I only put a few percentage of the portfolio in a new stock. And then once it goes up, boom, then we can have happy days, right? But it's a silly strategy, and Wall Street does it all the time. And it's just a way to convince yourself to sell for profits. That's all it ends up being. But it's going to produce worse returns over time, man. I mean, imagine, Meta is a huge position in my public account. I think it's like 40% of the portfolio or something like that, right? Or something close to it. Like, once it became 10%, I could have sold a bunch of shares. And then 15%, 20%. It would have been a horrible decision. Horrible, right?
What do we know about this? And,
what am I gonna do?
And to what degree do we think
What am I going to do then? Put that money in PayPal?
I go back to when, we were sitting at WWDC, and the stock has changed a lot from that moment that we were sitting next to each other.
Yeah, and Scott,
imagine you own NVIDIA, right? And you got a bunch of NVIDIA shares, and it goes to a $500 billion market cap, and it becomes a big weight in your portfolio. Like, oh man, I got to sell half my NVIDIA shares, and because we become to be too big of a position, right? And then NVIDIA goes to $1 trillion market cap, and you're like, oh crap, it's a huge position again. I got to sell another half of my shares, right? And then it goes to a $2 trillion market cap. You're like, oh my gosh, it's a huge position again, right? Got to sell another half of my shares. And then it goes to $3 trillion. I mean, come on, that's just silly. That's absolutely silly. Like, it's a bad strategy. Great companies should perform great over 5, 10, 15, 20-year spans.
Important because what's going on here with our artificial intelligence rollout at Apple is it's really tied to what people think the upgrade cycle of the next iPhone line will look like. So the report we're getting today is some of Apple intelligence features, that's what they're calling their AI features, aren't going to be ready when the new iPhone software launches in September. Instead, according to a Bloomberg report over the weekend, it's going to come in October. And to be clear, guys, this is not a delay. Apple said that AI is going to launch this fall or, quote, later this year in terms of the ChatGPT integration. But some caveats. We just don't know which AI features are going to launch first. It could be many months, even into next.
Listen. This next iPhone is going to sell very well. It's going to sell very well. It's going to sell way better than the iPhone 15. And it's nothing to do with AI. It's literally just because it's a bigger iPhone. I'm buying one. I'm probably going to buy several. People are going to buy this iPhone literally just because it's the biggest ever. Like, this AI crap, it means nothing for the next iPhone sales. Nothing. It's all because of the biggest iPhone. And every time Apple comes out with the new biggest iPhone ever, it always does good sales. It's just facts.
Before everything they announced at WWDC is available on your iPhone. On top of that, it's only going to be in U.S. English at first. No clue yet when other languages and other countries are going to get it. That's especially important for China, which has strict regulations around artificial intelligence models. Apple would need approval there. We also heard Apple say it's not going to roll out in the European Union because of regulations there as well. And even with this months-long rollout, many analysts are convinced this is going to drive iPhone upgrades for the iPhone 16 cycle. That's, of course, because you need last year's phone or better to use the AI features. And this morning, Bank of America analysts say iPhone upgrade cycle is going to, quote, remain strong for longer because of that measured rollout of artificial intelligence. That could even...
Like 95+% of Apple customers don't give a crap about whatever Apple's doing AI here. If they do care about anything AI, it's likely products from ChatGPT or maybe Google.
Extend to next year's iPhone 17 in 2025 and beyond that, Scott.
All right, I appreciate that, Steve Fkkkk. Thank you very much. So, sounds to me like you just heard from Fkkkk himself, Jim, as you own the stock too, that this is a whole lot of nothing. Because the stock is not reacting to it at all either.
Yeah, it was down just a touch, I think 0.5% when it opened, and now it's flat. Although I think the question for me, and I own it, but I own it significantly under the market weighting, is whether all of the upgrade cycle anticipation is already priced into the stock. I mean, remember the stock's up, I want to say about 25% off of the lows earlier this year, and a lot of that came on the back of the Worldwide Developer Conference and the Apple Intelligence announcement going into the phones. So clearly the market is anticipating, I mean, 25% on a, $3 trillion company, that's $750 billion. That's a lot of market cap that's anticipating one heck of an upgrade cycle. It's hard for me to get bullish beyond where we are now. I'm not bearish. I'm just neutral. It's below market
That's
weight.
fair.
I'm not tempted
That's
to add
fair.
at this
It
level.
felt like all of the gain came from the announcement at WWDC.
And the buyback. I don't want to leave that aside.
Well, the buyback always
Yeah.
has theoretically put a floor, as some would
that was
suggest,
historic,
under the
though.
stock.
Yeah.
But they've always had a huge
Yes, correct. They have. But I think Apple provides a unique opportunity relating to AI. It's the first mega cap company that really can take AI and deliver a product that's in the consumer's hands. And I think that advances the story significantly if they're able to successfully do it. Because now the consumer finally familiarizes itself with artificial intelligence and instead of just hearing us talk about it on the network and saying, what is it really going to do for me?
Not true at all. Just to be quite frank, have you used Google? Have you used Google over the last month or two? Like every single person that uses Google, which Google has like, what, 90% market share or something insane like that in the United States, right, for search. If you use Google, you're using AI, right, and it gives you the whole AI bio dealio with so many different questions. And so people are already familiarizing. Meta's forcing it down people's throats with their products. Like if you go on Instagram or Facebook or things like that, like they're slamming down people's throats. So people are already seeing AI-related stuff on a daily basis because these other big techs are basically forcing down people's throats. So if they think Apple is going to be the first to throw AI down people's throats, I'm just wrong about that, to be quite frank. Like it's already happening right now in major products that, I mean, the whole world uses, like Google search and Facebook and Instagram and these different things, right? Recent tech sell-off is a bump in the road, not the end.
I've read your notes. Did it really scare you a little bit last week to see what happened with Alphabet and Tesla and their results?
I mean, Dom, it didn't. Because if I look at the underlying AI growth in cloud, specifically from Alphabet, that's bullish. And where's Tesla going to be spending? It's going to be on incremental AI. Look, I think there's going to be a big week for tech earnings. I mean, when you look at Amazon, Microsoft, Apple, Meta, this AI revolution, I think, is just...
People are getting frustrated with Tesla. And when I say people, I'm talking really about a lot of bears, because obviously Tesla's earnings were not impressive, right? But yet the stock is performing great, right? I mean, look, it was up 5% today. And a lot of bears are getting really frustrated with this one, where they're like, what the heck, man? Earnings weren't good. Where's the stock up 5%? Listen. Tesla is about to come out with a $25,000 vehicle. It's gonna sell insane. And other people are reading through this ahead of time. So they're positioning into the stock way before the product is shown off and way before the product is actually going on sale. This is what always happens with Tesla. People start to buy it up and own the stock. People make a lot of fun of Tesla investors. Tesla investors are among the most intelligent investors in the entire market. And when I'm talking about most Tesla investors, I'm talking about the bigger money, folks that really move that stock. They're some of the most intelligent investors in the entire stock market. And you can see this by the returns the stock is given over time, right? These folks always get ahead of whatever big news is, whether it's a Cybertruck coming out or a Model Y or things like that, and the stock moves up huge. And then these bears get really frustrated. Why is the stock moving so much? It shouldn't be moving this much. What is going on? The company's numbers aren't even good. Then all of a sudden, 6-12 months later, the numbers completely change for the better. And then all of a sudden, people realize, oh, that's why it went up. They priced it in ahead of time. I'm telling you, Tesla's got a very intelligent investor base. Palantir is a very intelligent investor base. The bears try to make them sound like they're not intelligent, but then you look and it's like, why are all these bears the ones always losing the money? Who's the one that's really not intelligent in this situation, right? Who's the one that really understands Tesla on a high level? Would you say the bears do or the bulls do? Shoot, as somebody that's owned that stock for a long, long time, since what, 2018, 2019, I can tell you the bulls understand Tesla stock a million times better than the bears. The bears don't even understand like very base level stuff around Tesla. The bulls will understand the deepest subjects in regards to stock, including like how much cost advantage or efficiency advantage is going to happen in one battery cell versus another battery cell. Like the bulls go crazy with this. Like you don't even understand like how far some of these bulls go with their understanding of this company. Like they'll understand this company as well, if not better, than like people that actually work for the company. It's ridiculous. And the bears are, well, like you listen to the bear points, they're like the most low level of intelligence bear points you could ever imagine in regards to the stock. I don't even know how we got on Tesla, but I thought that, because we were talking about Tesla here, but I just thought that was important because I know a lot of bears are getting mad about seeing this Tesla stock just beasting, and they're like, the numbers aren't good. Tesla looks to the future. It always has.
And that's why I continue to look at it as a get the popcorn out moment. in terms of this tech bull market, this sell-off, I view it as a bump in the road, not the end.
All right, you got the popcorn out. So which of those four that I mentioned is going to be the main event for you?
Amazon.
Look, I think the main event is really going to be Apple, because that, to some extent, is really what we're seeing in terms of China growth.
Apple's not the main event. It is Amazon. And the reason being is Apple, the numbers aren't going to be great from Apple. Everybody knows that. Amazon's expected to have some pretty good numbers. If we look at Amazon here, as far as what analysts' estimates are for Amazing Zone, let's go ahead. Come on, see, this is why this AI stuff's not good. It's like, I want Amazon, not whatever you typed in here, AI. So if we look at earnings estimates here quarterly, Amazon's expected to have 56% earnings per share growth, and then they're expected to have 10.5% revenue growth. If you look at Apple's numbers expected, they're a joke. Now, do I think Amazon's going to beat these earnings estimates? The answer to that is yes. I do think they're going to beat on actually both those line items. So, and I think their guidance should be good as well. Although the consumer environment's not great, it doesn't matter. Amazon just puts up their numbers regardless of what's going on. So I'm feeling pretty good. AWS business is accelerating. The advertising business is accelerating and should accelerate even more, right? And then additionally, the e-commerce business continues to just steal market share from their competitors. So I'm feeling really good about Amazon, and I do view Amazon as being the real deal Holyfield and the one that everybody should be paying the closest attention to this week.
Obviously, iPhone.
Then after that, it's Meta. Then after that, it's Apple.
16 coming out September. The AI story, what we're seeing about demand. I think that'll probably have the broadest impact on the overall market. But then you look at cloud. Amazon, Microsoft, I expect strength there, similar as we saw in Alphabet. And I think that's what really the market's focused on here, despite a white knuckle scare last week for the bulls.
All right, because you brought it up, I'm just going to follow up really quickly because Apple's AI features will reportedly arrive now later than expected. A Bloomberg report says that they will now come in October instead of September and miss the upcoming...
I don't get it. White knuckle period for the bulls? Who? Like the short-term people? Well, like who are we talking about here? Like, if I look at three of my biggest stock investments, they're Meta, Tesla, and Amazon. I wasn't even like 0% concerned last week. Like 0%. Who was nervous last week? It had to be people that are really focused on the short term and call options and things like that.
Software update cycle. So what does this mean for Apple's earnings call on Thursday, given that the Apple Intelligence feature is so front and center?
Yeah, I mean, that doesn't move the needle at all for us. I think it's really focused on iPhone 16 September. I think this is really going to be an AI-driven super cycle. And at the end of the day, those customers will be going to be getting those AI features. I don't view that. It all comes down to developers. Developers getting it on time, that's the hearts and lungs of the Apple ecosystem. That's what the street's focused on.
You mentioned the cloud and the AI stuff that goes along with both Microsoft and with Amazon. If you take a look at those two stocks vis-a-vis what happened with Alphabet earlier this past week, maybe the results are positive, like you point out, but the stock reactions were not. So does this mean there's a shift in investor feeling or sentiment with regard to just what these AI ambitions are and how much they'll cost?
Yeah, it's a great question. Look, I think it's more just nervousness around when we're going to see AI monetization. Stocks have had monster runs. Some of the rotation to small cap. Is it over? But I believe this is the second inning of a 9-inning game. I mean, it is still 9 p.m. in this AI party that goes to 4 a.m. And I think that's what we're going to see. It's all about you follow the CapEx, follow the spending. That to me, that like last week, Alphabet, Tesla, those sell-offs are buying opportunities, golden buying opportunities in our opinion.
Agree with that.
And what about Meta platforms? People have been focused so much on Apple.
People should be hoping Meta goes down on their earnings. The chances are Meta's probably up 10 to 20% after those earnings come out. But you should be hoping Meta goes down 5-10% on those earnings, just to be quite frank, because a lot of people don't have positions built in Meta and they're just missing out on a crazy opportunity. Like Meta's going to run to 1,000 plus. And so, it's like, would you rather buy in a 500 or 400? Of course, you'd rather buy a 400, right?
Microsoft and NVIDIA and Alphabet. I mean, Meta Platforms is still pretty high up there with regard to its weight in the markets. What do you need to see from Meta?
It's about the read through from Alphabet. If you look at on advertising, that rebound I think is going to continue. That's what Zuckerberg's going to talk about. And look, even though they've gotten, I think some worries about their spending on AI capex, that's the right move. I mean, I think they are laying out. This is an AI arms race playing out, and Meta is not going to be on the outside looking in.
And before we let you go, out of all the Mag 7, what do you think is going to be the best one in the next 12 months?
I think a year from now, Apple, $4 trillion market cap. Microsoft will get there as well as the godfather of AI, NVIDIA. But it comes down to Apple. Right now, massive tailwinds in Cupertino.
So it's important to understand we got political ad spend going on. I'm sure if you've watched any TV recently or gone on the internet, you're starting to see these politician ads everywhere. And it's like, oh my gosh. And I know even my kids are already sick of them. They're like, oh, I don't want to hear any more these political ads, right? And I know it drives my wife crazy, and I just think about all the money I'm making off those political ads, so I kind of like, I'll put up with them, right? Because they make me a lot of money. Give to your favorite politician, and the money's going to end up in my pockets or everybody that owns Meta and Google's pockets, right? But the important thing to understand about that is all these political ads, it's not just about, okay, this campaign has $100 million to spend, and this campaign over here has $50 million to spend, and $200 million, whatever, right? There's a certain amount of ad spots that can be seen out there. So when you have a big influx of political ad spend, right, because a ton of people want to give money to Kamala and a ton of people want to give money to Trump, okay, boom, and then you got all the local elections, right, the smaller elections. Now all of a sudden you have all these political ads that need to be shown, right, which then if you're a company, a business, to be seen on somebody's timeline and beat out those political ads, you got to outbid them. But the problem is, it's tough to outbid them. So what ends up happening is ad rates go up significantly, right? Because if you want to beat out the politician who's got this insane amount of money behind them that they all need to spend over the next 3 months or 2 months, right? As a business, as a company, if you're Coca-Cola and you want to advertise, I don't know, Sprite, okay, you better come through with be willing to pay crazy ad rates, because the politician's going to be willing to pay crazy ad rates because they have to advertise as much as possible over this next 2 to 3 months, right? And so this happens across the board. And so the biggest beneficiaries of it over everybody is always going to be Meta and Google. Then the TV companies will benefit from that, right? It could be streaming companies like a Fubo, right? YouTube TV, which goes back to Google at the end of the day, right? Google is one of the biggest beneficiaries. YouTube, I'm sure you guys are starting, I have YouTube, premium or whatever, so I don't see any ads on YouTube. But if you don't have YouTube Premium, I'm sure you're starting to see a flood of political ads every time you go on and watch YouTube, right? All ends up in Google's pockets, right? If you go on Facebook, Instagram, a lot of these other platforms, you're going to start to see more and more political ad spend on them over the next few months. And they have to spend it quick. It's not like they can just wait on it. They have to spend aggressively the next 2 to 3 months. But meanwhile, you're a business, you have to advertise as well. It's not like you can just take the next 2 to 3 months off from advertising. And you're like, oh, you know what? We don't need to advertise Lay's potato chips for the next 3 months. No, of course not. That's not the way you run business. It's not like Starbucks like, you know what? We don't have to advertise for the next 3 months. It's not like the local, business that sells on Shopify and runs Facebook ads can be like, you know what? We don't need to do ads the next 3 months. No, you still got to do it, right? And so, but you better be willing to pay crazy money. And then right after that, you go into holiday season, right? Because elections get over in November, but then you're going to holiday season, which is still crazy ad rates. So the ad rates are going to be pretty nuts, especially for Meta, for the remainder of this year. It's going to be insane. It's going to be highest numbers we've ever seen in history, in my personal opinion, and by quite a large margin, right? And then, like I said, there's a lot of other beneficiaries. Google's going to be a beneficiary of it. Even companies like Fubo, small companies like that are going to be a beneficiary of it. It's going to be a lot of players that make a lot of money off this election, I can tell you that much. And not just the presidential, I'm talking about the local elections as well, right? And a lot of people are really getting passionate around this, right? You had the Trump side that was already extremely passionate, right, and willing to donate tons of money. But now that Biden's out, Kamala's attracting tons of money. And that side's attracting a ton of money and a ton of energy. And, woo, baby, spend that money, baby. Joe Terranova on how to play CrowdStrike.
Almost 3%. Companies saying that over 97% of Microsoft Windows sensors are back online. Obviously, this was a massive story. You own it.
Good.
Yeah. Well, What do you think of it now? I mean, did you buy more when it went down as much as it did? Did you think about it? Did you own this in the T?
Correct.
You don't own it personally?
I own it personally.
Oh, you do? Okay, so you couldn't do anything in the ETF, obviously, but what about personally?
Okay, so here's how I feel about this. First of all, I own this stock personally at around $120. So I have a significant profit. The ETF does not, unfortunately, the ETF doesn't own it at that level. The ETF, the position in the ETF, it's a losing position right now. So I feel very badly for people who own the ETF and are in it versus myself, who I have it personally. This is what I said last week. If I was trading CrowdStrike, I would sell it. Because that's the right thing to do.
You would sell it now?
If I was
Kramer,
trading,
by the way, called a bottom today on SOTS.
Okay. If I was trading CrowdStrike, I would sell it. That has nothing to do with doing a fundamental analysis of the company. It's based on what you're seeing in price action and the fact that generally, when you have these experiences like Chipotle did years ago, like Boeing has had the last several years, it takes time to recover. But I'm not trading these names. I said that to you when I bought this company. I said that to you when I also bought Palo Alto Networks.
What does that mean, though?
I don't know. I'm investing in cybersecurity.
I understand that, but what does that mean? If I was trading it, I'd sell it. Like if I bought it, when? What's the cutoff?
The difference between
Great question.
Trading CrowdStrike and investing in CrowdStrike is that price, when you're trading, dictates everything. So when you have a precipitous decline of 30%, price goes down 30%, you're trading it, you can't ignore that. You're taught as a trader that the first thing you remember is that your first loss is your best loss. If you are investing around the company, if you're doing pure fundamental analysis, if you believe in the long-term thesis of cybersecurity, then you say to yourself, I'm willing to absorb and accept a 30% loss because I believe not over the next several months, but over the coming years, this company will recover from it because they present something in their business model which is so overwhelmingly positive. And that's what I'm trying to do with cybersecurity, Palo Alto and CrowdStrike. I'm trying to be an investor, not a trader.
Steph, you take a look at this one?
Yeah, I always take a look at the number one player.
Did you think about buying it when it was down as much?
I did.
Why didn't you?
Because I think they're going to have to do a lot in terms of discounting. We don't know the churn. We don't know the legal issues. And it could be an overhang for a long period of time. That being said, if it were to sit here for a while, maybe even go down another 10%, absolutely. This is the number one player in the industry. That is exactly my investment philosophy. I always buy the number one on sale. Now, this
Wait, the number one? Wait.
No,
wait.
Yeah.
You don't own Fortinet anymore?
While you were gone, I sold it.
He's back.
Wow.
He's back.
Firewall channel checks are not good at Fortinet. They're not. It's been pushed out. And that means if they miss another product revenue division in this quarter, that'd be the third in a row, and enough.
All right? Enough. What have you done for me lately? I got you.
So I have cash from the Apple sale and from the Fortinet sale to be buying any kind of dislocations that we get during earnings. I always love to do that. But this one is definitely on my list.
Yeah, CrowdStrike, I feel like, if I was to look at that company, I feel like it's a little bit of a, do I think the stock's a buy or not? I would say it's a no-touch right now. I wouldn't short the stock either, by the way. I just wouldn't touch it either way, just to be quite frank, because there was such a big deal. We don't really know what the ramifications are going to be for CrowdStrike for the next 6-12 months. It's impossible to know exactly how big of a black eye that is for CrowdStrike. And our customer is going to look at Palo Alto or any other competitor versus CrowdStrike and just go with them because of how bad the branding was for CrowdStrike there, right? I mean, so I don't know. Does CrowdStrike, do customers then threaten to go to other companies to get and want CrowdStrike to discount, right? Bring down prices and use that as leverage of like, hey, you caused us to lose a lot of money because of this situation. We want a big discount on our next contract or we're going elsewhere. I don't know. That's all stuff that should be considered. And even in the next 6-12 months, I don't know if you're going to get the full answer. You could take 2 or 3 years to get the full answer of what the ramifications of this whole situation are. And so for a trade, I could actually understand somebody playing I actually disagree with Joe Terranova. I could understand somebody playing CrowdStrike from a trading angle. But from an investment angle, I actually don't agree with it right now. It's too murky. There's too much mud in this situation that's going to take 2 to 3 years to likely know what really happened there and what didn't, as far as what the business ramifications are here.
As you might expect, it's not been particularly strong after the global outage.
True, but JP Morgan says, CrowdStrike, delivering a masterclass on incident response. They like that one. UBS, short-term pain priced in, room for upside. How do you like that? And then Morgan Stanley has done key takeaways from global resellers. They like it. So there's a lot of people calling the bottom that George Kurtz, even though he looks...
I mean, we look at CrowdStrike, it would be one thing if the stock was trading insanely cheap right now on like a forward P basis, right? But look at that. I mean, look at CrowdStrike's forward P. Look at the 2-year out forward P that analysts have here, right? And once again, we don't even really know what the ramifications of this whole situation are or are not, right? For the next year or two, if not 3 years. So for that reason, I'm just like, it's not a cheap stock. It's not a cheap stock.
Remember, George Kurtz has raced for 24 hours. He's probably the number one racer in our country for Formula One. No one talks about it. He won Sebring, for heaven's sake. So people say he looked haggard on Today's Show. He always looks haggard. He always has the same jacket on. They want Dan Ives, for heaven's sake.
What is Kramer talking about? What in the flippin' flapjack are you talking about, Kramer?
But I do like the fact that he personally has gotten in a level of incident response. They screwed up. Well, he called me at 6 a.m. A week ago. It was off Friday. I was off. He goes, look, there's a release out. It's not very good. So I called him back and said, it's horrendous. And he goes, well, I thought that you would make that judgment.
Well, then you brought him on, and we had a pretty frank discussion with him at that point.
Yeah.
So what does that all mean? All right, the stock's down 32% in a month. Well, is this the bottom for it? I mean, obviously Wall Street now seems to be rallying to its cause to a certain extent.
Yeah, I think it's the bottom because it offers incredible. Look, I had thought that the business would go to Sentinel, which had the stocks going up, and Palo Alto, where the stocks did nothing. But the Morgan Stanley note does talk about feeling the floor. Bottom line, we are slightly more constructive on Crowd.
Yeah, there's something.
Well, look at that.
More confident.
How do you like that? They were ready.
They were.
I don't even have to say it.
It's amazing.
You know what? They had some encouraging partner feedback. Did you know that?
I do.
So anyway, yeah, I mean, this is maybe not an overreaction because it was really bad, but it does say maybe George Kurtz has really kind of done a great job.
So CrowdStrike, let's be very clear, could drop another 50% plus from here. With that being said, I would not bet on that. I would not bet that, CrowdStrike's going down to 120, 130, something like that. But do keep in mind, it could easily do that. If, let's say, the numbers start to come out really worrisome, let's say, like I said, a lot of customers are pushing back on pricing, things like that. You could easily see CrowdStrike's forward P coming down to the 30s range, right? And that's 50% downside from here. So, yeah, maybe it's the bottom, but I wouldn't bank on that. I would not bank on that. Next one up here, Kamala in taxes. This is important subject here, folks.
Obama are endorsing Vice President Harris in her bid for the White House. That endorsement seen as a critical one for Harris as she continues to ramp up her campaign. Mapping out what a potential Harris White House could look like when it comes to policies, Emily Wilkins joins us now with a closer look at one key area of interest, taxes. Emily, good morning.
Hey, Frank, good morning. Well, yeah, I mean, if Harris wins the White House in November, she's automatically going to become a key player in a tax battle that's set for next year as major provisions of that 2017 tax law will expire. Now, Harris is more progressive on taxes than Biden. As a senator, she introduced a bill to provide low and middle income families with up to $6,000 per year in a refundable tax credit. She's also proposed a tax credit for renters who spent 30% or more of their income in rent and utilities and made less than $100,000. Plus, on the campaign trail.
So let's be very, very, very crystal clear. This is probably not happening, but it would be devastating to the stock market if it happened. Devastating. But it's probably not happening. And the reason is we're likely going to get gridlock in Washington from this election. I would say that's a pretty high probability. And so the chances she could get a 35% corporate tax rate through is not very high in my personal opinion. But let me be very crystal clear once again. If that was to happen, it'd be devastating in the stock market. You're going to understand right now, the corporate tax rate is 21%, okay? That was obviously something that Trump got through, right? They were at 35%. He brought it all the way down to 21%. So if you were to go back up to 35%, devastating the stock market, because you're taking away 14 full percentage points of net income away from companies that they could use on share buybacks, dividends, to reinvest in their business, whatever, okay? The bottom line is it goes back to the companies rather than goes to the government. So if all of a sudden you take that away, remember, it's very important, it's not just 1 year that happens, it's every year. So you suddenly have to model in 14 percentage points of the profit not going to the companies, but going to, basically the government year in and year out for years to go in the future, right? Until you get eventually a proposed tax change again. So I would say the odds that happens, pretty low, but it's a possibility. And it would be devastating in the stock market if that happened, right? Devastating. So, just a little food for thought in regards to that.
2020, she proposed a corporate tax of 35%, and that is, of course, above the 28% that Biden currently backs. And she also proposed a financial transaction tax on certain Wall Street trades. Yet, Harris could wind up adopting a stance closer to Biden's. Remember, a lot of her proposals were to win over Democrats in a primary. Now she has to win over independents and even some Republicans in a general election. Mark Gerson, a partner in Miller and Chevalier's tax department, said that with 101 days left, Harris might not have time to develop her own in-depth tax plan.
Given the short period of time, given her focus on other issues, understandably, it may be, in fact, that she really kind of inherits the Biden budget proposal and inherits, let's say, the $400,000 threshold, inherits the proposal of going for a 28% corporate rate as opposed to something higher.
Now, Harris has called for a full repeal of the 2017 tax law, but letting it expire completely would lead to higher income taxes for most Americans. So,
this is kind of one of the many annoying things with politics in the day and age we're in, is you don't even really know what people's plans are, just to be quite frank. And people are only voting for people that they feel they like emotionally. You don't even know what the plans of these guys and gals are. They leave it very vague, open to the interpretation. Maybe it's this, maybe it's that. But it is unfortunate because then if you get a candidate that actually puts out all their proposals, we want this, we want that, we want this. You ever notice they never do good in an election? They're usually out very quick. They could have a full plan. Here's exactly what we want. Taxes to be, here's exactly how we want. This to be, that to be, right? Here's all the changes we're going to make. And they give detail down to the actual details. Those people never do good in elections, right? But yet, if you just sell bigger picture, these people are bad, we're good, we're going to fix everything in what's wrong with the country and what's wrong with the world, boom, there you go. You got it. You got it, man. And it kind of goes back to Nike, right? Nike. Does Nike ever sell you on the actual product? No. They sell on the brand, right? And people resonate with the brand. And so people go buy Nike because they resonate with that brand and the feeling around it, right? And they never talk about our souls are this and our this and that. No. Okay? And then you could be another brand come in and you could talk about all the details of your product and why it's the best, right? And you struggle, and you struggle, and you struggle. It's the same way with politics, man. It's the same way. You just got to sell people on, they're bad over here, I'm good, I'm going to fix all your issues. Don't worry about how I'm going to figure out how to fix all these issues. Just, I'm going to do it. Boom. There you go. You got the votes, man. Frustrating. And that's just, I think, why a lot of people are, just one of many reasons why a lot of people are disenfranchised with, politics.
Lawmakers are getting geared up already for negotiations over what goes and what stays. Democrats say they are planning to focus on areas like increasing taxes for corporations and the wealthy, as well as bringing back tax credits for parents and assistance for housing, childcare, and paid leave. Frank, this is definitely a preview of something that I expect will be taking up a lot of the bandwidth on Capitol Hill, regardless of who winds up winning in November.
All right, so regardless of who winning, it's going to take up a lot of energy, specifically that tax policy. I do want to ask you, today, former President Obama and the former First Lady Michelle Obama endorsing Harris, does that change the math at all when it comes to her policy?
For her policies, probably not so much, but in terms of just having the support of the party behind her, it is a huge, I think, for Obama to come out. The fact that he hadn't endorsed Harris yet was very conspicuous, but it's sort of, she's had these rollout of endorsements.
So worst case scenario in regards to the tax policy, right? Worst case scenario I see is corporate taxes going to 28%. I think 35% is like one of those numbers you put out there and you try to aim for if you're somebody like that, right? But I don't think like I said, is insanely low probability. I would call it less than 10% probability they ever go to 35%. I would call it about a 45% chance they could get a 28% through if Harris won the election. I would call it like a 45% chance they got a 28% corporate tax rate. But I would say the highest probability at the end of the day is corporate taxes stay 21%. So that's just my opinion on that. All right, guys, appreciate you joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. If you're looking to take your investing game up to a much higher level than where you're at, then you can apply to join my private group, get access to $1,000X. That will be the pinned comment down there to fill out an application. We'll see if we can get you in there. Much love and have a great day.